So I made a video in the past as to why I decided against investing into fame-based stocks, so Facebook, Amazon, Netflix, and Google. Now, due to the coronavirus, I've been looking into ways of minimizing any losses should such an event happen in the future. And one way I'm planning on mitigating any losses while still growing the dividends is by focusing on tech-based dividends. So we can see on my watch list on the left-hand side, I've got 3 companies that I've been looking into. So the first company, Microsoft, you can see from the graph that currently the stock price is quite high. Now, earlier in the month, I bought half a stock in Microsoft, and we can see that down here. Now, when the time is right, I plan on adding more of Microsoft stock to my portfolio, but I want to focus on why I was interested in purchasing Microsoft. So taking a look at Seeking Alpha, we actually have some of the normal stats that we look at. And the dividend yield is at 1.19% currently. Now that is nothing special, but my goal here is not to go for a dividend yield that will rapidly grow my dividends. The goal here is simply to have some form of stability. Now, the nice benefit with the likes of Microsoft, as opposed to that of the other FANG stocks, is that dividends are paid out. So taking a look at Apple as the next company, you can see again a similar trajectory with the current market price of the stock. And right at the bottom of my portfolio, we can see I have 1 share in Apple. So looking at the stats for Apple, we have a dividend yield currently of 1.08%. And that is slightly less than that of Microsoft, but for the same reason, I purchased Apple just as a defense mechanism. And we can see throughout this period, the tech industry has been somewhat resistant with respect to the coronavirus. And that's mainly because technology-based companies are able to work remotely. But even in the technology industry, companies have been struggling. But relative to the likes of the retail sector, we've actually been seeing some steady gains in the technology sector. And that leads me on to the final company, and that is IBM. Now, I haven't purchased any of IBM right now. Out of the 3 stocks, IBM is one of the more riskier out there. But taking a look at the stats, we actually have a dividend yield of 5.46. So if we're chasing dividends, then this is a nice number, and it's definitely a driving factor into purchasing IBM. Now, I was drawn into adding IBM to my watch list, and that is because there is a new CEO by the name of Arvind Krishna. Now, he previously worked as an engineer. So for me personally, having a CEO that has an engineering background, especially when they are focusing on cloud applications, for me this puts IBM in a better direction compared to who they had as CEO previously. There's an ongoing trend, and you can see that with the likes of Google. They all have CEOs that have an engineering type of background, and I personally feel as though that sets up the company onto the correct path compared to having a CEO that primarily has a background in pure business. Now, I say that IBM is somewhat of a risk, and that is because in the past, IBM was notoriously known as a hardware-based company. They are since trying to pivot to that into the cloud space, but we have companies such as Microsoft with their Azure technology, we have Amazon with AWS, and we have Google with their Google Cloud platform. So if you invest in IBM, the hope is that IBM can either match or beat existing rivals within the cloud space. And for me so far, with the price that the market is right now, I haven't been too interested in buying into the company. And I'm trying to think long term as well. When I brought the likes of Microsoft, of course I only brought half a share, but my goal is to add to that position going forwards. And I have to be motivated in the company to continue to invest. And with the likes of IBM, I'm not fully committed to doing that, but I may change my mind in the near future and start buying into IBM. But for now, I've left that, but I will keep the company within my watch list. Now, as I mentioned earlier, tech companies can still be impacted by the likes of the coronavirus, even though tech companies have an advantage when it comes to being able to work remote, being able to have their employees distributed away from an office. But as we can see from the article here, we have Google that recently announced that they'll be cutting back on hiring for 2020. So skimming through the article here, we can see that Google Google will be significantly slowing down the pace of hiring for the year 2020. Now, there are some small strategic areas where there will be an exception and they will ramp up the hiring process there. But all in all, the numbers will decrease. Now, prior to the coronavirus outbreak, the company was on track to hire 20,000 employees. So far, there's been 4,000 Googlers, which are just the interns that they've subsequently hired, and there will be thousands more. And they've mentioned the struggles that the remote style has for new employees in terms of equipment and training. Now, in addition to hiring, we have the costs associated with their data centers and any forms of marketing and travel. So it sounds as though there'll be cutbacks in those two areas. Now, most of you watching this video are thinking, well, I don't work for Google, I don't really care. But it just goes to show that these large tech companies are having to be proactive in their measures to scale back and to reduce costs so that they can continue operating at profitable levels in the future. Fortunately for Google, they have a lot of money. They're able to make these decisions. It really is make or break for a lot of smaller companies, and it's a lot harder to scale back in terms of costs for the smaller businesses, and only time will tell how badly impacted the likes of smaller businesses are within the technology or non-technical industry. So those are a few changes made to my portfolio, buying into dividend-based tech stocks. With that said, I'll catch you in the next one.